Hello everyone, it's Wednesday, October 8. Today we're analyzing the euro and British pound charts to identify potential market moves. The European currency came under pressure in early trading yesterday, dragged down by disappointing euro area data. German factory orders fell by 0.8% in August, missing economist expectations for a 1.3% increase. Broader statistics from the bloc were similarly downbeat, with France's trade balance figures adding to the gloom. In addition, political turbulence, especially in France, heightened pressure on risky assets. Meanwhile, some US economic reports scheduled for Tuesday were delayed by the government shutdown, leaving traders to focus on the latest consumer credit data and a series of speeches from Fed officials such as Neil Kashkari, Raphael Bostic, and Michelle Baumann. Kashkari signaled that the current currency situation does not warrant an interest rate cut, warning of the risk of another inflation flare-up. Against this backdrop, dollar buying intensified. The downtrend in the euro-dollar pair, which began on September 17 when the Fed lowered rates, has resumed, pushing the pair toward the key 1.1600 level and raising the likelihood of a further decline in the near term. The British pound also slipped yesterday before attempting a modest correction, but soon came under renewed pressure. For now, sterling's prospects for recovery appear limited. Now, let's turn to today's macroeconomic calendar. Key data includes German industrial production, which is estimated to have fallen by 1% in August. The calendar is otherwise light for the euro area, with the main highlight being the release of minutes from the Bank of England's latest policy meeting. Market focus will be also on remarks from Fed officials Alberto Mussolem, Michel Barr, and Austin Goolsbee. Policymakers have recently shown sharp divisions. Some are opposing further rate cuts, while others are pushing for more aggressive easing, advocating reductions of more than a quarter of a percentage point. This underscores heightened uncertainty around the Fed's policy path and could spur fresh demand for the dollar, particularly as the government shutdown continues. In addition, the U.S. Central Bank will release minutes from its most recent meeting, where the FOMC lowered rates by 25 basis points. Traders will be watching for signals on the Fed's future direction. As things stand, markets are leaning toward another rate cut in October rather than a pause following September's move, the first reduction of the year. Turning to technical analysis, the 1-hour EUR USD chart suggests that a false breakout at 1.1611, triggered by weak German data, could generate a buy signal and push the price up towards 1.1646. If the pair breaks and consolidates above this level, the euro could then return to 1.1681 and potentially reach 1.1715. At this level, I would recommend going short on the rebound, targeting an intraday correction of 30-35 pips. Short entries at 1.1646 and 1681 should be considered if a false breakout occurs. On the downside, if the price breaks below 1611, a sell signal will be generated, with the euro sliding to 1.1576 and possibly further to 1.1530. Around 1530, long positions on a rebound could look attractive for a potential move of 35-40 pips. Long positions at 1.1576 and 1611 should be considered only in event of a false breakout. As for the British pound, the setup is similar. A false breakout at 33.65 would generate a buy signal, potentially pushing sterling up to 34.07. This move would allow buyers to keep the pair within a broader sideways range. If the price breaks and consolidates above 34.07, the pound-dollar pair could recover to 1.3448 and possibly reach 1.3488. At this level, I would be prudent to consider short positions on a rebound, aiming for an intraday correction of 35-40 pips. Short positions at 1.3448 and 3407 should only be considered in the event of a false breakout. Given a light macroeconomic calendar in the UK, if there is limited buying interest at 1.3365, it may be better to postpone long entries until 1.3326 on a false breakout of 3282 on a rebound, targeting a 35-40 pip move. Good luck to all.